Okay, so I'm recording now, so we're just gonna keep going. So we're definitely in a bear market. All right. So what does that mean for us? We're looking for puts. So you don't want to be that person who is super bullish all the time and you only make money on call options because you're not going to be making a lot of money right now because everything is dropped, and then that's another thing. You don't, some people want to, buy the bottom, right? Buy the dip. But what happens when you buy the dip and it keeps dipping? So you don't want to fight the trend. The trend is your friend. So if everything is declining, you want to be looking for some short opportunities right now. And then once the market gets bullish again, then you want to, trade with the trend and start looking for a call option. So, last thing here. So, one thing I'm going to preach today is SPY and QQQ, right? So, if you don't know SPY and QQQ, they're both ETFs and they track indices. So, the SPY ETF tracks the S&P 500 index, which is the top 500 companies, and then the QQQ is an ETF that tracks the NASDAQ, which is the top 100 companies that are non-financial, and most of it is tech. So one thing I want to point out here is if you look, they are very, very similar. The top 10 holdings in QQQ: Apple, Microsoft, Amazon, Tesla, Google, Facebook, Google G, Google L, NVIDIA, PayPal, and Adobe. So if you look at this, most of this is tech. So that's why when tech is crashing right now, because a lot of people are saying how the tech sector is very overvalued, it's very expensive. They're trying to say like it's been pumped and all that. But if you think about it, if tech is doing bad, so if any of these are doing bad, it has the potential to bring QQQ down. I mean, Apple's 10%, 11% of QQQ. So SPY as well. Look at this: Apple, Microsoft, Google, Amazon, Tesla, Facebook, Nvidia. The only differences here is we have Berkshire Hathaway, J.P. Morgan, United. This is a little bit different, but I mean they're very, very similar. So why do I say you want to learn SPY and QQQ? Because it's very liquid, which means there's a lot of money moving around and it's easy to get in and out of your contracts, and they're very cheap and it's a high delta. So the thing about, so I'm going to pull up the option chain later. So when it comes to trading SPY and QQQ, especially if you haven't discovered what your trading strategy is yet, don't don't put your money in Amazon and Tesla. Like there's a high probability you're gonna, especially like if you don't know how to handle like being in a red for a little bit. Like if you got like a super tight stop loss, we're gonna talk about that later too. Because with options, you don't wanna when you trade options, you don't want to have a super tight stop loss because some people will be like, okay, I'm gonna set my stop loss at 5% or whatever. I'm telling you that stop loss is gonna get hit a lot. And then you go notice you're gonna sell your position, and then you're gonna sell, let me mute. Okay. You're gonna sell your position, and then you're gonna notice that, oh, it just reversed. So it's like, why? And it's gonna be like, well, the way this works, you guys also have to understand is that this took me a long time to think about, bro. When we're buying and selling our options, we're not buying and selling them to someone else on the other side of the computer, like at home trading. You're selling it usually, you're selling it back to the person who sold it to you. So you're exchanging with the brokerage or the exchange funds, where all the trades and transactions are taking place. So, trading is a zero sum game. So if you're winning, if you're gaining, someone else is losing because most of the time someone is buying a contract back from you at a price that is unfavorable for them and you're profiting. So you got to remember that. You have to have the mindset when you're trading. It's like you want to win. It's competitive. Like you don't want to treat this as a hobby. You want to treat this as a profession. Like your goal is to profit at the end of the day, and that means someone is losing, but so what? We want to win. So that's the end of that. So what I'm going to do now is we're going to talk about my money back strategy. So let me pull up this document. Give me 1 second. I'd have had it open already, but let me just give me a second. All right, guys. So let me share my screen here. Um, okay. So let me check on this waiting room. You can make sure no one's in there. You know, so one right here. Oh, how do you use Delta? Yes, we will talk about that very soon. Just bear with me here. Okay. So let me show you. Someone asked how to use Delta, by the way, so I'll just respond to them. So this is my money back strategy. I just gave it a name. Just, it's just what's working for me. And I like to call it the money back because this is what has been successful for me. Also, if you haven't had a chance to look at this document, you can just message me on IG or you can just type in the chat and I'll post the link. I could probably just do it right now, actually. Share. Let me just post this in the chat so you guys can have it. I just posted in the chat this link. So if you want to look at this document, study it on your own, feel free to, but I'm gonna start going over it right now. So here we go. So basically, always found a strategy that works for me and in terms of my chart setups of appearance, which all click together would make decisions easier. So when it comes to trading, you want to have a strategy and you want to have your chart visually easy to look at. Like sometimes I see people's charts and they have so much things on them. Like it's gonna be hard for you to understand what's going on because like it's just too combobulated. So I found an appearance that works for me, and I'm gonna pull up my charts later, and you're gonna be able to see like how I set it up and what works for me. Also, you want to have a scalping mindset. So you scale out of your positions at key levels. So a lot of people, even myself, I had problems in the past when do I buy, or when do I sell, when do I take profits and things like that. What are your profit targets, your stop losses and things like that. When will I sell if the price reaches here? Or when will I start to take profit? What it means to scalp is you're in and out of your positions very, very, very fast. So, like I said, it could be seconds, it could be a few minutes, it could be 5 minutes, but you want to take, if you get profits, you want to take those profits off the table. So, if you're in the green, even 10%, 10, 15, the majority, the profit target that most people preach is 20%, right? So they like to say you want to aim for 20%, which is great because, like I told my stats earlier, on average, that's what I'm aiming for. But the secret is that I'm not looking at the percentage as I'm trading. I'm looking at the chart. So it just so happens that the way I have my support and my resistance levels mapped out, that's just the return I'm getting is 20%, which is beautiful, but I'm not forcing it. You don't want to force percentages. You want to trade what you see on the chart. So when I say, hey, you need to have a scalping mindset, that means if you're in a trade and you notice it's green and you're near a resistance level, and this is the importance of having multiple contracts. Sell one of them. If you have 2, 3 contracts, sell one of them at that resistance level and take some of that profit off the table. Because if the price reverses and you haven't took no profit and you turn a winner into a loser, emotionally and psychologically, it's gonna bother you. It's gonna mess you up. You'll be like, dang, I was just up $400, but I didn't sell. Now I'm down 200. Now you're selling for a loss. So when you have a scalping mindset, that means that you don't have no problem getting in and out of your trades quickly. And let's say the stock keeps on running. That's why you want to buy multiple contracts because that way you take some of the profit off the table, but you still got 1 or 2 contracts that are running that you can still take advantage of the move that is still happening, right? Also, when you're drawing your support and resistance, right? This is one of the most important things that you have to master. You have to do it on different time frames. So I'll start with the weekly. I start with the weekly, and then I go to the daily, then I go to the 4 hours, then I go to the 1 hour. I usually most of the time never do 30 minutes, but you can if you want to. But I'm gonna show you guys how I draw my support and resistance. But this is very important because you're going to see it at first, and it's going to be a lot of lines on the chart. And some people will be like, oh, there's just too many lines. But when you zoom in and when you're trading in a 1 and 5 and 15 minute time frame, the lines are not going to look as if when you're looking at it on a weekly chart, and that's the time frames that you're trading. Like I said earlier, I don't know if you guys are swing traders. Personally, I don't like to swing, especially not in this market right now because there's been so many gap ups and gap downs that you just can't really predict. And then you want to buy time on the contract. So I like to trade weekly contracts and I like to trade zero day to expiration contracts. So we're gonna talk about that later too. But yeah, you want to draw your support and resistance on multiple time frames. Have an understanding of supply and demand zones. This guy Carmen Rosado on YouTube, he explains it really well. So pretty much supply and demand zones are, you can draw them on your chart. There's zones that typically price tends to either bounce or reject. So if you draw this rectangle on the chart, you can get a gauge of the zone that you might find some resistance or some demand or supply there. So I'll show you guys quickly how we can do that as well. Like I said earlier, I'm just watching a few stocks. You can trade them up and down every single day. It does not matter. You don't need to have a stock that has a super big catalyst because there's something called this thing right here, ATR. Has anyone heard of this? If you've heard of this, can you let me know in the chat, please? If you know what ATR is, please tell me your nose. Yep, there you go. Average true range. So what this means is that typically every stock has an average true range, which means it moves a certain amount percentage wise and dollar wise every single day. So that's why, like I said, this guy Mahir, he was able to trade this Amazon. It didn't matter if Amazon had a news catalyst or not. He was able to trade Amazon every single day because Amazon has like an ATR. I don't know what it is right now off the top of my head, but it might be like, I mean, right now it hasn't been performing well, but over the past couple of months, it's been like $40, $50, right? So that means every single day the stock tends to move 30, 40 to $50 every single day, whether it's up or down. So you know what that means? That you can profit every day trading the same stock, whether it's up or down, because on average it's been calculated that, and you don't want to fight the numbers with trading. Trading is a numbers game. It's very statistical and mathematically has a lot of mathematical formulas and statistics. So the numbers don't lie. So if the stock is moving 30, 40 minutes every day, then you can make money on that same stock every single day. And that's why it's important that I preach that you want to start to get familiar with a certain amount of stocks because you'll start to know their average true range. Like Tesla, I've been trading Tesla a lot recently, and I've been profiting off. Like I think I just on Friday, I made like 1.1K. Not crazy, but on Fridays in this market, you don't want to be sizing super crazy. I mean, you can, but a lot of risk. But I'm just learning. You start to learn, like if Tesla, it's down, if it's down $10, right? And you're looking at it, and you might be like, oh, that's a lot. But if you know Tesla and you know its true range, you know that Tesla moves about $30 a day. So if it's down $10, there's a good chance that it could move 20 more dollars to the downside. So you can still get into some short positions. And yeah, I love Tesla too. Tesla's crazy. And then once Tesla has earnings this week coming up, I believe on Thursday. So I'm definitely gonna be watching Tesla because Tesla got hammered. It's like below 1,900 and like 70 or 80 or somewhere around there. So a lot of eyes are going to be on, Wednesday. Thank you for the correction. It's on Wednesday, so I will be watching Tesla. So here are some stocks I'm watching every day. SPY, QQQ, mRNA. Literally, this stock when COVID was happening, this stock was crazy, right? Everyone loved mRNA. Now this stock has been getting beat down so bad, like every single day. I'm gonna pull up some charts later, but literally looking back, I wish I would have just did a put on this every day because every day it's been dumped every day. SPX, this guy right here is this can be a bread or butter for a lot of people, but the difference between SPY and SPX is that SPX is the market itself. So the SPY is a ETF that takes the weighted average of all of the stocks within SPX, the S&P 500 index. So this is a weighted average, right? And this is the actual market itself. So I'm gonna pull up some option chains later. We're gonna be able to see, but like XPX can make you a lot of money. But and this is the thing, the SPX and SPY are pretty much the same thing. So yeah, SPX is volatile, but that's why you scalp it. You don't want to day trade SPX. You want to scalp it. And then we have Facebook, Boeing, Tesla, Netflix, Microsoft, all good options. So indicators, I use the 9 and the 21 EMA, and I use VWAP. I'll get into that later when I pull up some charts. So I like to trade on the 5-minute and the 15-minute time frame, but I need extra confirmation before I enter. I'll also trade the 2-minute too. 2-minute is good as well. 2-minute is good for scalping. I just don't like the 1-minute chart because it's so messy. So at least if you don't want to trade the 5-minute or the 15-minute, I'll recommend the 2-minute. So my money bag, what really made me name it the money bag, and this is the main thing of my set, the triple stack EMA, right? So if I'm looking at my chart and I see that the 9 EMA is above the 21 EMA and it's above the VWAP, those are 3 criteria that are telling me that this price is in an uptrend. So when you're thinking about entering your trade, you don't want to enter your trade and be like, oh, the price is increasing, let me buy now, or the price is decreasing. You want to have some extra confirmation as to, you want to validate your reasoning before you get in your trade. So if I see these 3 things right here, that is a clear indication that this is an uptrend. Why? Because the exponential moving averages just takes the average of the price over your desired time frame. So if you're trading in each candle, so if you're trading on a daily, each candle would represent the past 9 days, right? Or the past 21 days. If you're trading on a 1-minute, it's gonna be the past 9 minutes, the past 21 minutes. So when you're trading using these exponential moving averages in the VWAP, and the VWAP, for some of you who might not know, VWAP is volume weighted average price. So this means that on average, considering volume and price, that line is telling you, where the price is being traded. And you say you've been using, Andy says he's been using the strategy, but stop loss is too tight and it gets hit. And yeah, and that's what I was saying earlier. If you're trading options, you do not want to have like a 5% stop loss, because you're gonna get stopped, because the way these hedge, because remember, it's a competition, right? So we're trading against hedge funds as well. Like we're retail traders. We don't move the markets with our money. The market is moved by hedge funds, institutional, big banks, right? They have millions of dollars going in and out of the market. They know that me and you, retail traders, they know we got these little 5% stop losses. And if a 30% stop loss gets hit, then sell it. If you're down 30%, you shouldn't be in the trade anymore. Like the 30% is fine if that's your stop loss. That's okay. And if your stop loss keeps getting hit, then the timing of when you're entering the trade must be the problem then, or not really the problem, but the area that you have to start thinking about, right? But then still falls after the big. But yeah, anyways, if you're long, if I see the 9 EMA above the 21 EMA and VWAP, it's an uptrend. I'm looking for buy opportunities. If the 9 EMA is below the 21 EMA and below the VWAP, that is a downtrend. And we're going to look at visually what that looks like. So I've also taken less trades in the past 2 weeks. My win rate has been 70%. I showed you that. I showed you guys that earlier. So a thing is that when you're trading, you don't want to overtrade. So you don't want to be trading a whole. I made 38 trades, and I was able to make around like what 4.6K or whatever. Like sometimes if you hit your profit goal in a day, walk away. If you make $200, $300, $400, walk away. That's okay. Even if you have more buying power, even if you have 3, 4, 5, 6K more. I mean, depending on how confident you are in your skill, because you can easily lose your 600 profit in one trade, and then you will be like, dang, I need to make that back, and you go start trading more, and then you go lose more, or you can win more. But you just, if you have the money, you want to walk away, because the market will take your money, and it has no problem taking all of it if you let it. So deltas, I also pay attention to the deltas. Oh yeah, I skipped this line. Master the 921 EMA, and you don't, if you don't like the 921 EMA, you don't have to use it. Those are just the indicators that work for me. Everyone might have their own little. Some people go use the RSI, some people use a MACD, some people might use a simple moving average, 20, 50. Everyone has something different, but the main thing that I want to tell you guys is this is what's working for me. But you can take from this and you can tweak it however you like. So I trade SPY and QQQ. they have low contract prices but high deltas, right? And I'm gonna get a little bit more to this later, but when you're looking at the option chain, I'm gonna bring it up later once I start looking at charts and stuff. When you're looking at the contract prices, the contract prices are cheap. So it's about what, like $100 to $200 per contract, right? But the delta is high. So it's about 30 to 40 cent deltas on these. So that means that if SPY goes up by $1, then you just made 40 cents per contract, which is per contract is 100 shares. So that you make it $40 basically if it goes up by $1. And which is good because if you start looking at Tesla and Amazon, people think, oh, okay, I want to trade those names, right? You got to pay the delta is what you want to look. That is what's going to help you indicate how much money you can make. And then you got gamma as well, but gamma is kind of, it's important, but I don't look at gamma too much because gamma is how much the option price changes after that first dollar has been made, right? But sometimes, I might get out of my trade before the stock price has moved more than $1. So I'm really looking at the delta. And so we'll talk about that a little bit more later. Let me see, someone in the waiting room. Okay. Okay. So like I was here, I've lost money on Tesla and Amazon, so I'm taking lower deltas until I'm consistently made money trading those names. And the reason why I lost money on Amazon and Tesla is because one, my skills were still developing. So when it came to, my strategy, I didn't really have a strategy. I was throwing money in there, hoping, I see one bullish engulfing candle, and I'm like, okay, this is good. And so, I didn't really have any criteria, any strategies, and they are expensive. So if you're holding Amazon and Tesla and you're down $400 or $500, and if you're not used to being down that much, emotionally and psychologically, it's going to start messing with your decision making process. Especially if you're trying to, I mean, a lot of people when they trade options, they want to get rich quick, right? So they might full port, your full portfolio on one trade, Amazon, Tesla, you're trying to get those 100%, 200% winners. But these stocks, they move a lot, which means the option is going to move a lot. So you might be green and then you might be red. Uh, you might be green and then you might be red. So if you have the account size for it and you're used to trading these, by all means. But I don't really preach people to trade these names unless you have a strategy that's working for you and you know about the option Greeks, the deltas, and you know how to scalp, because you want to be in and out. Like here's the point: if the trade goes against me, I'm not losing so much money quickly, which causes fear and bad decisions. If you see that you're down 30% on Amazon and Tesla, you're going to be down a couple $100, and if you're not used to making a couple $100 in the day, it's going to be hard for you to dig yourself out of a hole of you being down 3, 4. Like that's the thing. A lot of people who trade these names, they can easily make it back. That's why they do it. So if they down $600, $700, that's okay because they could easily make $600, $7 back. Like their daily P&L is a lot more than what they're losing. Let's see. After taking big losses, the fear kicks in. To stick to your strategies and following the price action is key. That's one of the major keys about trading. You don't want to have emotion. You don't want to be greedy and you don't want to be fearful because once you're greedy, you start making bad decisions, and once you're fearful, you start making bad decisions. You have to take all of your biases and opinions out of the chart and just pay attention to the price action and follow it. So a lot of people, when they trade, they kind of predict things, right? You want to predict where it's going. You don't want to predict because you really don't know. You want to react. I like to say reaction over prediction. You want to look at what you're seeing and you want to make decisions just based off what you're seeing. You don't want to be like, because prediction causes you to put your bias and opinion in the chart. So you could be like, I predict that the stock is going to go there. And then what happens when the stock doesn't go there? Then you're going to be like, oh, I was wrong, and that might make you feel some type of way. And that might hurt your confidence. So you don't want to predict, you want to react. So you want to be like, well, based off what I'm seeing, I see some bearish engulfing candles. I see a bear flag. I'm seeing that the price is not breaking through. It's having a hard time holding support. So that's letting me know that this is bearish. So I'm gonna follow the trend, the downtrend, and I'm gonna get into some push. But I'm not gonna say I expect Tesla to go and drop $20 more. I'm not gonna predict that. If it happens, it happens. Hopefully, I'm in a trade long enough to catch most of the move, but I'm not gonna predict it. So position sizing. Now this is all relative to what your account size is. I don't know what everyone's account size is here, but right now, just because and this for the people who joined, I was saying that phone call. I was able to go from 500 to 5,000 in 2 weeks, and this is the position size that I was in that helped me get there from 100 to 1.3 per position, right? And I didn't start getting to 1.3 per position until I had about 3K, right? And that's a large. Now, don't get me wrong, that is a lot. If you have $3,000 and you're getting in 1.3K per position, that's a lot. So those are days that when you're doing that, that's when you want to have a tighter stop loss, right? Because like I've preached to people, because you put how much money you put in the position, you know the only way you can lose all of it is one, the contract expires worthless, or two, there's a super big move in the stock into which like you just don't sell for a loss. You just will hold it to zero. But you know, for me, sticking to 100 to 1.3 positions was what I was comfortable with. And I said I like around 500 because when I say you guys, I have active trader on Thinkorswim, so I might be in like 5 positions, right, or 3 or 4 positions at once, and I'm comfortable with my account size where it was at, with was from 500 to 5,000. Around that, I was able to manage $500 positions very well, like multiple, right? So if I'm looking at one and it's down 20% or whatever, I could feel comfortable with that. But that's like $100 or whatever, that's not really nothing. So you want to figure out for you guys for your own position for your own account size, you want to figure out what is the position size that you are comfortable with. Some people might have 10, 15, 20, 25K in their account. So this ain't nothing for you. So they said you might be like, okay, I'm comfortable with 4K for position, 5K. I mean, it's all relative to what your account size is and what you're able to manage. Here are some links that really help me. I'm not going to spend too much time in this Zoom going through like a whole bunch of technical analysis because there's videos on YouTube that really explains it very well, but everyone has access to this Google Doc. So look at these. Beginner's Guide to Supply and Demand. We're going to talk about it briefly though. Some candlestick patterns. You want to understand candlestick patterns, the candlesticks, what they're telling you, how to find support and resistance levels, best time frame for swing traders if you're into swinging. And these links right here are probably some of the most important. How to think like a professional trader. Now, this is trading psychology. Trading psychology is big in trading. Of course, you want to pay attention to the numbers, the option Greeks and things like that, but you want to start thinking like a professional trader, and these will help you get into the mindset. I don't know if you guys have heard Trading in the Zone by Mark Douglas, but I highly recommend you read that book because you have to start getting comfortable with the randomness that happens in the market. A lot of things are random, and a lot of stock trading is probability. What gives me the highest probability of profiting? So when you hear people say, I only trade when it's a clean setup, only trade, when I have these criteria, like earlier when I talked about this, when I see this is increasing my probability of being successful. It's never going to be 100%. But if you can get it higher than 50, because flipping a coin is 50-50, you don't want to trade if your odds are 50-50. That's gambling, right? A lot of people will tell you, oh, you're gambling. Well, if everything is 50-50, then yeah, it's pretty much a gamble because you can win or lose. Some people, yeah. You could win or lose a lot when you just 50-50 odds. That's why you want to increase your odds. 70% is good. If you take 10 trades and you win 7, that's good. You're gonna lose some. So I definitely recommend you guys check out this link. And so here's my money back playbook. So these are some confirmations and criteria I use when I'm making a trade. We already talked about the 9 EMA, average of 9 candles in the closing time frame, the last 21 candles in the closing time frame. We got volume. We make money off volatility and high volume. So you want to look at the volume, which shows you the aggressiveness of the buying and selling. And you have VWAP. VWAP is a volume weighted average price. And so here's some strategies that I use as well. So this is the 9 EMA, 21 EMA stack. When the 9 EMA is above the 21 EMA, go long. That means that the price is trading above the 9 most recent candles exponentially, because the exponential moving average takes the weight of the most recent prices. If you use a simple moving average, everything is weighted the same. But when it's exponential, the most recent prices have a higher weight. So, and disclaimer, just because this happens doesn't mean it's going to work every time. That's why you have to have other criteria as well. You want to know where's the price, is it close to resistance, is it close to support? Like there's more things you have to consider, but in general, this is what I'm looking at. If it's above the 9 EMA, go long. Below, go short. Divergence, divergence. Hold your longs and your shorts when the 9 EMA diverges away from the 21 EMA. So I'm gonna pull up some charts here pretty soon. But if you see the 9 EMA going away with this diverging, if it's going away from the 21 EMA, you want to hold your position. Because that means price in terms of the trend, it's going where you want it to go. If you like, so if I'm in a long position and the 9 EMA continues to go away from the 21 EMA, that's good. Converging. So you want to sell your position when the 9 EMA converges to the 21 EMA. So if you're bullish and you start seeing that the 9 EMA is starting to head back towards the 21 EMA, you want to sell your position. You want to take profits if you're in profit. Because that just pretty much means that the price is starting to, go more towards the quote unquote mean, right? In statistics, the mean is like the average price. So the price is starting to go back towards the 21 day or 21 candle mean or whatever time frame you're looking at. So I start looking to sell my position. I'm pretty sure you guys have heard of the 9 and the 21 EMA crossover. So a lot of people appreciate that too. Like when they cross each other, that indicates, that's a sign of a trend reversal. If you want to get in your positions, you want to look at that too. So if you're looking at the 921 EMA and you were bullish, but you notice that the 9 and 21 EMA cross and the 9 EMA is now lower, than the 21 EMA, then that's a sign of a reversal. You don't want to be bullish anymore. VWAP. So if price is trading above VWAP, I'm looking for buy opportunities, because what that's telling me is that the price is trading above the volume weighted average price. It's trading above its average price based on volume. So that means there's a lot of bullish momentum. That's a lot of demand. So you want to look for buy opportunities. If the price is trading below VWAP, that means it's trading below its average price based on volume. So you want to look for sell. When I say sell, I'm talking short, put. You want to look for put. And then buy when the 9 EMA is above the 21 EMA in the VWAP, and sell when the 9 EMA is below the 21 EMA in the VWAP. So let me pull up my Thinkorswim now, and let's look at some charts. So give me 1 second, guys. So let me see. Let me pull up my Thinkorswim here. And if I'm going too fast or if I'm going too slow, feel free to let me know. It's about 7 here, so I don't want to take too much of you guys' time, but I'm trying to, provide as much value as I can. So let me go ahead and share my screen here. This is my Thinkorswim. No, wait. Um, there's here. All right. So look at some charts here. So let's look at SPY. So I had looked at this earlier, right? So this is what I was saying. So this is SPY on the weekly chart, right? And then this is how I like my chart. I don't have the grid lines. I like a clean. I like an all black chart. Some people, they don't like to fill their candles. Like they leave the green one unfilled or whatever. I like simple green, bullish, red, bearish. And I don't have anything else on the chart. But I'll show you when I add my indicators. So I just want to show you guys that if you look at SPY, right, we were clearly in this big uptrend, right? I mean, we had this dip around here in October. We had another dip around here. This is October of last year. This is when the Fed started talking about raising interest rates and stuff. So it took a little dip. But if you notice here, look at this trend. This trend has been uptrending from this dip, and I believe this is a pandemic. Yeah, this is March of 2020. So look, we had a huge dip right here, right? Let me go to this. Right. So you can see here, we had a huge dip right here. That was the pandemic. But look what happened after the pandemic. So this was considered, we were very bearish, right? Correction. Everything was down. But look what happened right after that. Bull market happened. Boom. We were going up, up, up. Uh, we were going up, right? But then look what just happened. What just happened right here? We broke our uptrend right here. We see we broke this. Look at this bearish engulfing candle right here. This is indicating that this trend, we are no longer in an uptrend. So if you're looking for it, and you want to trade with the market. So like if you don't want to be like right here, there's some people like, oh, buy the dip, buy the dip. I mean, yeah, but we don't know how far this can go. This can, I mean, look, if we start looking at some support levels here, I mean, we have a support level. So look, and then support level right here. Oh, now I'm gonna talk about this a little bit later too, but we have a support at 427 right here. You know, we have at least two touches, three. We have one, about two, three, four, five, six. You know, when you're looking at your support and resistance, you want to see how much times the price is hitting that level. So we've seen it's hit this level all these times right here, right? So we could potentially see a bounce here at it's only in the waiting room, yeah. We could potentially see a bounce here at 427, but we don't know. But it's highly likely that could happen. But that means we still got about at least uh 10 points of spikes drop down. We closed at 437, but looking at the hours, we're up 441. So if I was to let me just do this real quick. If I was to put on, oh, we're looking at a weekly, that's why. But yeah, this is just to show you guys that we are no longer in an uptrend, we are in a downtrend. So you want to be thinking about puts. So let's look at a daily chart, right? Look at this. This is, and look, and this is the importance of looking at your charts on different time frames, right? Because when I'm looking at a weekly, every candle is a week. So this is 1 week. Look at this week. This week was, I mean, if you were a put this week, you made a lot of money. A lot of money. This is crazy. We dropped from 460 to 437. So if you were in calls, your portfolio took a hit. But if you were in puts, then you made a lot of money. But this every candle is 1 week. And then when we look at the daily, every candle is 1 day. And remember that support line I drew earlier? Now you can see it on the daily. Now look right here. We had a bounce here. We have a bounce here. We didn't really have much activity here, but look, we had a bounce here again. So it's highly likely that price can bounce around here. It might bounce sooner though, because when you start drawing your support and demand, look, I have another support level right here. Here at boom. So look, let's take a step back and let's quickly go over how I chart my support and resistance, right? So this is what I was preaching in the document, how I start from the weekly. So this is what I would do. Every chart, it doesn't matter what it is. We can look at, I'm gonna go over this. I have like a little trade review for you. And this is also, okay, let me slow down. So let me go back to SPY, right? Go back to SPY. So this is what I do. I'll go to the weekly and I'm looking. So when I do my support and resistance, I have two different colors. I have orange and I have blue. Orange is for weekly and daily levels, and blue is for hourly level, 4 hour and 1 hour. And the reason why I do different colors is because they represent different strengths. So a support and resistance level on the weekly and daily is going to be stronger than the support and resistance on the hour time frame. So as I'm trading, if I see it approaching, so it could be breaking through hourly resistance and support. But if I see it start to get near a daily level, then I'm more inclined to like make my decision because it's going to be a stronger level. So look here, let's start with our resistance, right? Let's start from the top. 479, that was the high, right? Boom. That's what I'm gonna start with. And we have two touches. It touched one here, once, twice. I'm gonna make this orange. And if you have Thinkorswim, it did take too much time to go and get into how you can do a whole bunch of stuff. But I edit the properties, make it orange. I set as default, boom. So now, and I like to use dash lines. So boom, that's our first resistance, right? And then we have another one right here at about 472. You see, we have a touch right here. We have a touch right here. We have a touch right here. That's three touches. And then we want to start looking down. Right here, not so much. I mean, kind of, because the price like opened right here, I guess. I mean, what's this, 462? I guess you can put it right there. And you want to start looking at the wicks. When you're looking at support and resistance levels, you want to look at the wicks because the wicks tell you where the price once was. So right here, these wicks are telling us right here that in this area there was high demand, you know. So the wicks tell you that, this either, or if you look at like right here, a lot of selling going on right here. The price made it opened here when it's red, we opened higher than no, yeah, we opened I might be higher than what we wait. So, okay, if we're looking at the green, we open here, we close here. So the close price is higher than our open, and it's vice versa for bears. So right here, our open price is higher than what we closed at. So we open here and we close here, but we open here, we end up closing here, but price ended up going way down here. Price went way up here. But the overall candle is bearish because we open here and we close here. So then I keep going, right? So I'm gonna go back to so I'm still looking, is this, and then again, when you're looking at the weekly, sometimes you don't always need two touches. They say the rule of thumb is when you're doing support and resistance, you want 2 to 3 touches. But when you're looking at a weekly, you don't always need 2 touches because this is a week. So a week of price bounced off this level here. So if we was to, so this is 449.22. So if we were to go to the daily at 449.22, look, we have a touch here and we have a touch here, here, here. That's what, like 3 or 4 times. So that's why you want to be able to get comfortable looking at different time frames, because right now when you look at the weekly, it looks like it only touched one time. But if you zoom out and you zoom in and you look at the daily, you can see that it touched more than one time. And then if you even zoom in and you look at the 4 hours, I'm pretty sure it touched and it's right here. So look, one, about 2, 3, 4, 5, 6. It touched like 7 times at like pretty much 450. So on the weekly chart, it just looks like one, but that's 1 week of trading. So then we can just keep going. And you pretty much get the gist of it, right? So I'm just going here, looking for some levels here. I'm looking for 2 touches. Look right here at 436. That's where we're almost at. So if the price tomorrow for SPY, if it goes, if it doesn't bounce off 436, I'm looking for puts, because like this is a strong support level for SPY at 436. And then yeah, and then so you start like that, right? And then I go to the daily. Boom, we come to the daily now. I do the same thing. And then you can do this on Thinkorswim too. Like, I like to condense my chart. So I don't like it to look like this. You see how like it's so elongated? I like to condense it because you can see more information. Because like if you're drawing a trend line, I don't know, some people might use like Trading View or something. I don't use Trading View, but like if you're drawing a trend line, right? And you're drawing it or whatever, boom. But if you have your chart looking like this, like there's so much information, that data that you can't really see. But when you condense it, you can see more price activity going on. You see, you can see more. So that's what I like to do. I like to condense the chart. So now we're on a daily level. So I keep doing the same thing, right? So look, I'm coming through here, and this is good for scalps. You have a lot of levels to get in and out of your trade. So let's see right here. I see another one. I'll just go through, and this is a skill. Your charting, you have to get your charting skills. You have to perfect it. So I'm going here. I'm looking. Boom. I see another level right here. Let's see. I see another one right here, and you can just keep going and just you can just keep finding any levels that look like support resistance, 2 to 3 touches, mark it. And so you keep doing this, right? And then I go to the 4 hour. Boom. And when you see this, and let me take off the extended trading hours. So when you see this, you might be like, dang, this is a lot of lines. But when you zoom in, it's not going to look like this. So I go on the 4 hour, right? So look at this area. And because on the 4 hour, this will be levels that you didn't see on the daily and weekly. Boom, here's another one. And then I change the color to blue, because this lets me know that these levels are not going to be as strong as these orange levels. Boom. So now we got blue lines, right? So now I keep going. I don't really see much right here in this area. I keep going. I'm looking. I see one right here. Look, 3 touches. One, two, three, 4, 5, 6. 468 was a big level. You mark it blue, and then you keep going. You get the gist of it. And then so what I do is, and then basically you're gonna see like all these lines, right? You might be like, oh, this is too much. Like you can't even really. Then once you add indicators and stuff too, it's gonna be a lot. But look, once you zoom into the 5 minute, and then let me go to this. So once you zoom in, right? Now look, now you got your levels, right? You see all those lines? You don't see all those lines anymore. You're trading per day. So now I know, look at this price. It bounced right out our daily level right here at 444, and it came up to 446 and it rejected it. Boom. And then it broke support. It came right here around this level. It pretty much, and this is pre-market too. So you want to do your pre-market levels. Bounced here, came back up, broke support, and look, it kind of came around this area here. It kind of bounced a little bit, and then it went lower, and then it ended up, and it ended, and it ended up kept going, right? Bounced around here, and then your support and resistance is not going to always be 100% accurate, but it just gives you an idea. So like if I had entered the trade right here, if I entered this trade right here at I noticed that I see this big green candle here is at the bottom. So we had this downtrend, and then we see this is a pin bar or hammer. When we go into like about the technical analysis, about the candles. This is a clear indication of a trend reversal. A lot of bullets, they tried to push the price way down here, and we brought it all the way back up here, and this is at the bottom of a downtrend. So this is a clear indication that this is probably going to reverse. If you got in around here, if you were a scalper, you could have sold. If you had 5 contracts, you could have sold one right here. Boom. You could have waited, and you see this daily level. You sell 2 more around here. Boom. And so you got 2 more contracts left. And you notice this. You're comfortable holding though, because we are still in uptrend. Uptrend means higher highs, higher lows. Look at the highs. High, high, high. Right? We see here, and then if you wanted to, you could have waited to see if the prices go bounce off any of these supports. You notice that it bounced, it broke through this, but it bounced right here. And so you're like, okay, cool. You keep holding your trade, it come back around here, you could sell one more, or you can see if it's gonna hit here. So these are your profit targets. Your resistance becomes your profit target, and your support is like your stop losses. So if I'm bullish and I got in around here and price comes up here and rejects and comes back down here, I'm a sell right here because this is support. So this is kind of like my stop loss. And so these are your profit targets. So if you're in the trade right here and you notice resistance right here, sell right here. This is your profit target because this is a resistance. And then we don't know where the stock is going, but at least we're comfortable with where we're selling, because we're selling at key levels, right? So that was a quick introduction to how I do my support and resistance levels. You start from the weekly. See, when you look at it like this, it's not pretty, but who trades the weekly chart? Nobody. So it doesn't matter, right? You make your weekly and daily levels one color. You chart it up, and then you go to your daily. Do the same thing. You chart it up, and then you go to your 4 hour. Chart it up, and then you go to the 1 hour even. You chart it up. And so then you go see all these lines, but then when you're day trading, like you're not going to see all those lines. You go see all the levels you need to see. Look at that, and then you can see the price respects these levels. Look, reverses right here. It fails. So if you got in a short, this will be a perfect opportunity to get in a short right here, because you see price rejected in this resistance, and we're in a downtrend. You sell one right here, boom, and it's like by multiple. And then you sell another one, and you can probably get out of your full position right here. You went from 446 to 443, that's $3. And if you're looking at the deltas, if you're trading with like a 40-cent delta, that's like $120 for one contract that you just made. Now, if you got 5, 6, 7, then boom. So that's all I'm saying. So that's that. So that's how you do your support and resistance. And I'm gonna quickly just look at supply and demand zones really quick. So I don't want to keep you guys too long. So when you're looking at supply and demand zones, you just want to find areas that there are big price movements. So like right here, I already see one around this area right here, and then you want to draw a rectangle. This has been a demand zone in the past. So if you look at this, look, price came right here, boom, bullish, very bullish, right? And look what happened when price came back to this zone right here. We have more bullish momentum. It didn't last too long. This is actually, it only lasted in pre-market. But this is because there is a lot of bearish sentiment in the market, but the price typically would bounce around this area. And so you notice that this demand zone, which means that usually buyers overpower sellers in the zone because the sellers are overpowering the buyers in the zone. That means that this demand zone is invalid, which means you want to be looking at puts. And you can do this for each of these like these little zones you see. And it works for supply zones as well. So if you look up here, and you want to look at major price moves like right here. Look at, and then for green is demand zone, and you make it red for supply. Let me go here just to make it transparent. Boom. So that means around 474, 472, 474, typically we see some selling. So right here. So right here, you can see that demand, this supply zone got invalidated right here because demand's overpowered, buyers overpowered sellers. So that's good. So that means, okay, there was more demand than supply. But look what happened. We came back in the zone, huge sell off, boom. Supply ended up overtaking demand. And look what happened again right here. Price came up here to this supply zone, got rejected. So that's how you want to think about demand and supply. You want to look at typically you want to look at like the 4 hour is good, or you can look at the 1 hour as well. So you can see it green, red, red, but you want to look at the bigger time frame. Okay. So let's talk about indicators now. So we're looking, oh, I cleared everything, but I have it saved too. Oh wait, and if you have Thinkorswim, you can save different styles, right? So you see I was able to just, so, oh, quick tip. When you're trading, you don't want to chart in the morning. You want to have all this charted the night before. So before I go to bed, like tonight, I'm gonna go through my watch. I'm gonna go through my watch list: Amazon, Tesla, Spy, Netflix, QQQ, AC, Facebook, Microsoft. All of that is gonna be charted. So like if I go to Tesla right now, it's gonna already be charted. You see? So you don't want to be doing this the morning before. In the morning, you want to wake up. You want to search CNBC. You want to search Seeking Alpha. You want to search Benzinga. I'm gonna type in the chat because I look at this, I research this every morning because there's going to be some articles published on what's going on in the market. You want to find your pre-market news. You don't want to be spending time drawing support and resistance. You want to focus on, you want to like mentally get yourself ready for the day, prepare yourself, and you want to educate yourself on what happened overnight and what's happening in the morning. And look at this. You see, so I don't know if you guys know about S&P futures, but futures pretty much tell you, it's like an indication of how the next day is gonna go. Let me see. Is anyone in the way? No. What time do you wake up? I wake up at 5:30 every day. I wake up at 5:30, 5:45. I wake up, take a shower, drink some tea, and drink some water, and I'm in front of my screen. Because you have to mentally prepare yourself. You gotta be in the right mindset. So I wake up at 5:30 every day. So look at S&P futures right now. We're up 30 points as we speak. So if you come look at this chart, okay, so look at this. So this is a sign that there is a lot of bullish momentum in the market right now. 30 points for the S&P for the S&P futures, which is hash ES, S&P 500 futures, minis, I believe. This is very bullish. So we have a strong resistance at 4423. So tomorrow, if we get past 4423, I'm gonna be looking at some calls. But we got a next resistance here at 4429. So you want to see how the price is reacting around these levels. Look at this. I had this. This has already been marked. I didn't do this today. This has been marked. You see, I have support right here around this level. We have resistance. We ended up. We see this is resistance because look at the trouble this level gave us right here. Why are you not working? Look at the trouble this area gave us. We we touched right here. We tried to pass. We broke below. We touched it. Boom, boom, boom. We were struggling around this area, and then we had a breakthrough. And then eventually, you guys, I'm pretty sure you guys know you want to be able to draw. Like you got like your bull flags and stuff like that. I don't really have the time to go over all that stuff, but this is a bull flag. So we broke through the bull flag here. You have a bull flag because you got a long pole and then you got a little bit of consolidation, and you see how the bodies of these candles got smaller, and then boom, we had a breakout here. But yeah, so futures are looking good right now. We're up $30, so tomorrow might be bullish. You guys, we're up 30, almost 35 points. So tomorrow might be bullish. What time do you sleep? Like 11:30. It's hard for me to go to bed like at 10. I'll be up thinking about the market, so it'll be keeping me up a lot of times. So yeah. So let me go back to the PowerPoint. I don't want to take too much of you guys' time. Probably go end it in about 10 minutes or so, 10 to 15 minutes. So bear with me. We talked about supply and demand. So I still need to talk about scaling in and out of trades, resistance sizing, and stop losses. And I want to talk about the option chain, like what strikes to choose and all that. So when it comes to scaling out, I kind of touched on it earlier, so I don't want to spend too much time, but scaling out means you don't buy 10 contracts at once, or you don't sell 10 contracts at once. You do it gradually. So for instance, let's say you're hesitant to get inside of a trade, right? Buy one contract, see how the price reacts, and then you buy more if it's going in your direction, or you wait for a pullback and you buy more. Or let's say you want to get out of your position. If you come up to this level, you don't want to sell all 10 because look, the price can end up going to your next profit target. And that's when you get that, oh, why did I sell? Well, that's why you sell some of your business. So you can sell half, you can sell a third. If you have 10, you can sell 3, you can sell 5, you keep half. If you have 4, you sell 2, and you let your runners run if you're already in profit. And you keep letting it go, and then you wait to see how price reacts. So that's what I mean by scaling in and out. And that helps with averaging up and down, like when you want to average down on your trade. Um, so I want to quickly, I'm gonna go. So the agenda, I'm gonna go over this Tesla trade I made, and then I'm gonna pull up the option chain really quick, and then I'm gonna just leave some last remarks for some psychology tips. So about 10 more minutes, guys, and we can end this. So let me go to Tesla. So this is how I made 1K. I made 1.1K on Friday trading Tesla. This is how I did it. This is exactly my thought process here. Oh, shit. Hold on. All right. So this is like a live trade recap. So trade open, right? And we had a gap down the day before. So if I zoom out here, let me look at the like 4 hour real quick. Like the day, like look, we're clearly in a downtrend. So you want to trade with the trend. Uh, so yeah. So yeah, so price was what it closed out 101, and we had gap down to like I forgot what we opened up, but it doesn't really matter. But you know what a gap down is? The price gap down overnight. So it closed when the day ended on Thursday. It was like whatever price, and then in the morning pre-market it was down like $10 or whatever. So this is what I was thinking, right? So when I was saying I trade the market open, I have the 5 minute up. If you have this 1 minute up right here, I don't know. It just can be misleading because look, let's say you take 1 minute and you see this candle, you're probably thinking bullish, right? But look what happens in the next couple of next candles. Red, red. You see this green, and then boom, red, red. So for me, I just like to trade the open or at least the 2 minute. If you want to trade the 2 minute, that's fine because like, it's less candles. You see this, you don't like long wicks. Long wicks means there's a lot of indecision. And then you see this doji candle here, and then look at this big bearish engulfing candle, right? So here Right here, it's already like red, because this one candle represents 5 minutes. So for the first 5 minutes, where we and this is bearish because look, buyers brought this price all the way up here and got rejected. All this got rejected. So this is bearish. So right here, oh yeah, this is not. I have to look at it 1 minute though because I have it drawn out. So I entered this trade right here at, let's see, this is at about 6:40. So I waited about 10 minutes of market activity to get into this trade. I bought one Tesla put, 950 strike at $619. So I bought one contract here. I noticed that the price was bearish. We're in a clear downtrend of lower highs and lower lows. The highs are getting lower, the lows are getting lower. So I bought one contract here, right? So I want to buy around this. I'm buying around this support level. So see, we ended up breaking down. I haven't sold anything yet. We got a little bit up and down here. We come back to break through this level. This became resistance. Remember, if support breaks, it becomes resistance. So now this was acting as resistance. So a lot of people would have sold. They would have seen this and be like, oh damn, like, all right, this is the trend reversal. I'm gonna sell. But the reason why I knew not to sell is because, for one, I would have sold, me personally, I would, since I got in right here, why would I sell right here? Like, like even if I am in a losing, of course, like I was down at this point because the way the option pricing works, I'm in the red right now. But this is when I average down. So I'm thinking, okay, I know this stock is going to pull back because the whole market is tanking. So don't, why would you want to get in calls just because you see this? The whole market is this is from Friday. All this is literally just bleeding. So like this is going to continue in the downturn. It just had a little pullback. So I averaged down. I bought another put right here. I wanted to lower my average cost, buy another contract on the pull up. So with this for the pullback. So if I entered at 619, I bought another. See, look, I was down $300 at this point already. Off of one contract, I'm down $300. I bought another one at 380. So now this has lowered my average cost. So to find an average, you would just add these two, divide by two, right? So my average is probably around what, like four, some three, whatever. So then I'm watching and I noticed here, I'm looking at this level, 976. The price broke through support, right? I bought another contract at 504. So I'm buying more. I'm trying to maximize my profits now because this is clearly, we are clearly back in a downtrend again. Lower highs, lower lows, right? Boom. Clearly in a downtrend. And so look where I sell at. I sold two of them at 755. I bought at 619. I bought another one at 380. I bought another one at 504. I sold at 755. Why did I sell here? Can someone tell me why I sold here? Anybody? See. Oh, and yeah. First, can someone answer why they think I sold right here? Yes, perfect. Support level. That means that there is a high probability that this stock could bounce right here. And I'm already in profit at this point. So I'm going to take some profit off the table. So I sold two. And then someone wanted to, they want me to put my indicators on here. Sorry, yeah, thanks for reminding me. I kind of forgot. So this is what I do. I load this style, go to trade review. Let me just do money back. So there's a lot, just because I have all these drawings and everything. But look, clearly look. So this blue line is a 921 EMA. The red line is the blue is 9 EMA. The red is the 21 EMA, and purple is VWAP. Purple is VWAP, right? So it's kind of messy because I got all these drawings here, but let me do this for you guys just to make it a little clearer. Hold on, let me go to low style. Let me back. Great. Perfect. So look, you can see here, like I say, triple stack EMAs, VWAP. You see here, right here, look how, and then when I say diverging, look how the 9 EMA is diverging away from the 21 EMA. That means you want to hold your position. Right here, look at, they're all close to each other, which means like there hasn't been a clear indication of where this price is going to go. But we see here, and for you guys, I like to make my lines thicker. Right now it's thin because I just want to make it easy for you guys to see. But I like these lines are thicker when I'm trading, so it's like very clear what I'm looking at. But the 9 EMA diverging away from your averages. Remember, these lines are your averages. Your VWAP is your volume weighted average price, and this is your 21. So as this is diverging away, you want to hold your position, right? And this is a clear indication of a downtrend. Not only are we making higher lows and lower lows, our indicators are telling us that the price is diverging away from the average, which means we're down, we're going down, right? So yeah, so I asked you guys this question earlier. Why did I sell right here? We're at support. So I'm taking profits right here. I sold 2 contracts. So I keep holding, right? And so I'm looking at the EMAs, and look, we got bullish right here. Why did I not sell? Who can tell me why I didn't sell after seeing this big candle right here when most people probably would have sold the other contracts? Why do you think I didn't sell right here? I'm gonna give you a hint. Just look at the look at the EMAs and this wick. Yep, exactly. So this is not a trend reversal. This is just a little bullish behavior. But price, look at the EMAs. You're still way below. Look at VWAP. You're way below VWAP. You're nowhere near the average price that based on volume. So because it didn't even test the 21. It has if it would have tested this and broke, I probably would have sold my last one. But it didn't even test the 21 EMA. So I was like, no, I'm gonna keep holding. And look what happened. Goes down even further, right? Now we're getting it. So now we broke this level again. And so now I'm thinking, okay, I'm looking at the contract premium. And I'm like, okay, now we're around at $1,000 per contract. And I bought in, remember, I bought in at 600, 300, and 500. Now we're at 1,000. So now I'm thinking like, okay, I know I'm in profit. Now I want to know, when do I want to sell? So right here, I noticed we got a little reversal. Boom, we go and test this level again. And what happens? We reject it again. So I'm like, I'm gonna keep holding my position. Now, why did I sell right here, which is honestly perfect? Because look what happens in like the next couple minutes. We get this uptrend right here. The reason I sold right here is because I told myself my goal. I was like, I want to sell at 950. This is where I want to sell. But I noticed the premium. You guys gotta look. You guys gotta pay attention to the premiums when you're trading. I noticed that I knew what price I bought in, and I knew where the premium was at. I was like, I'm satisfied with $1,100 of my premium. I'm happy with that. I don't want to be too greedy. So I was like, even though I sold at what the price was at 952. I wanted to hold this for $2 more, but I was like, no, I'm not gonna risk it. I'm already up. I made 70% on this trade. So I knew I was up, So I'm like, I'm up 70%. I'm not gonna risk losing 30% of 20% of my gains to try to get 20 more percent if I'm already up 70. So I sold my last one here. So that's it. And then you can see and look what happens. Look what happens to the EMA. We start to see them converge, which means the 9 EMA is starting to go back up towards the 21 EMA, right? Which is a clear indication that we're starting to look bullish. Look what happens. They cross here, and this whole point right here is bullish. So if you wanted to, you could have got in your position. You could have got into a buy opportunity, even though you are trading below your VWAP, your 21 and your 9. This will go against like my strategy technically, but that's what I'm saying. Everyone has different trading styles. So you could have got in right here if you felt confident enough that this was going to be an uptrend, and you see we broke or you could have got in right here. We broke resistance, boom. And when you're a scalper, you don't want to hold those trades too long. So look, if you had got in either right here or even right here or even right here when the EMAs cross, where do you want to sell at? If you, this is where do you think if you had gotten anywhere in this area, where do you think you're gonna sell at? Losing momentum and reaching peak. Uh, but yeah, if you had got in right here, what do you think? Where's your first profit target gonna be if you're scalping? If someone answers. Someone said VWAP. Someone said big buying volume candle. Um, those are good answers. Me personally, I'm gonna sell. I'm looking, so right here. If I got in right here, first I'm looking right here. How is this price going to act around exactly? How is this price going to act around this? If I got in right here, I'm looking at this next level, 961. How is price going to react here? I noticed it broke through, so I'm holding. We dipped a little bit, but we bounced. Look where we bounced at. If I zoom in right here, we bounced off the 9 EMA right here. So I'm going to keep holding. And now, guess where I'm going to sell my position? Boom, right here at this resistance level. That's why you want to. That's why you want to have all this charted out before the day happens. Because these are your profit targets and your stop losses, right? So uh, if I was in this trade and I know this price broke this right here and it looks like it's going to be in a downtrend, and if I bought it down here, I'm gonna sell my position because we rejected this level right here that we might, boom, we could possibly go, down here. All right. So quickly, let me start wrapping this up. So let me pull up the option chains. I'm gonna tell you guys some secrets here. So this is SPY. So when you look at the option chain, I don't know how many of you guys use Thinkorswim, but I love Thinkorswim because I'm gonna show you guys my setup real quick. So this is how I trade. Uh, so this is how I trade. I have I have a six grid. So I'm watching every day. This is how it works. So open my chart. I'm watching I'm watching SPY. I'm watching QQQ. I'm watching Tesla. I got SPX down here. And then I have active trader. I don't know if you guys know what this is, but it only works for Thinkorswim. I don't use Webull or Robinhood. Oh, interactive broker. Yeah, I'm pretty sure you could find a way to when I'm in my trade, you see this. So this is for whoever's using. Wait, is anyone here using Thinkorswim? Can you let me know? Because if not, I won't waste your time talking about this real quick. But if anyone uses Thinkorswim, okay. So if you're using Thinkorswim, um, what you want to do is you want to use active trader, right? So I use a sixth grid. And active trader, you find it by clicking on these bottoms on the side. See, you can turn it on and off. You can put a chart right here if you wanted to. Uh, you could put level 2 data if you wanted to. You can put time and sales. I'll put active trader. What this allows you to do, this allows you to get in and out of your trade very fast because look right here. You can see the premium. This premium's at $400 right now, right? So you don't have to keep flipping back between the option chain, the chart, and then I have hotkeys too. I'll teach you in like another video. You want to have hotkeys. So if I press shift and I press R, I'll go here to the monitor page. If I press shift and I press X, I'll go to the option chain. If I press shift and I press S, I go to the scanner. If I press shift and I press chart, I'll go to the chart. So that's why I'm able to look how quick I can go from screen to screen. So I'm looking here, I'm looking here, I'm looking here, I'm looking here. And so this is how you do it. So you see these numbers here, you see this number 2 and this number 3. This is how you link the option contract to your active trader. So you'll come here. Let's say so I'm looking at the option chain. Okay, quickly. How do you know which option to buy? This is what you want to look at. When you're looking at the option chain, on the left, these are calls. On the right, these are puts. Here's your delta. I don't care what the strike price is. Like, I literally don't care. I'm looking at the delta because the delta is telling me how much this option premium is going to move based off how much the stock is moving. So, if I'm paying SPY, look at these deltas. I'm going to tell you guys something. So, see, this is a 33-cent delta, and it's only $120. If you pull up Tesla right now, if you were to look at Tesla, let's look at what we can get to get a 30-cent delta. Look at this. For a 33-cent delta, you're gonna pay $2,480. So the reason this is more expensive though is because Tesla is gonna move a lot more than SPY, of course. But think about the math of this, right? 33 cents is still the same delta. What you want to do is if you're buying SPY, This is why you want to buy multiple contracts, because if you put in $2,000, if you so that's if let's say you buy 20 contracts, right? If you buy 20 contracts, you can still get the same percentage return on your trade as you would if you were trading Tesla or Amazon. It's all about the percentages of the return. Because of that, delta means a lot. If you go to Amazon right now, that's why when people got these big accounts, when they're trying to trade these big names, but you don't have the skill yet, you're just gonna lose a lot of money. Because look at Amazon, 34 cent delta is $4,000. So that means per $1 change in the stock, you gonna make $34 per $1. So if you have $4,000 and the price is just to move $1, you just made $40, which is terrible because you put in 4,000. You know, and yes, we do have earnings next week on Tesla, so everything, so implied volatility, and that's why it's also more expensive for Tesla, or like why these calls are so expensive, because Tesla probably might have really good earnings, and it might like do very well. So of course, when they're selling stuff, they want to maximize their gain. But yeah, when I'm looking at the Austin contract, I'm trading spike Q2 mostly. So I'm looking at these deltas. I'm looking at 33 and 0.27. And this is out of the money. I know you guys. So at the money means like you're buying a contract right at the price it's trading at. In the money is you're buying a contract that is already below the strike price. The price that it's trading at is below. And then when you're trading out of the money, that means that the stock price has not hit the strike price yet. So I'll always trade out of the money because it's cheaper. It is cheaper. So I'm looking at this. I'm gonna tell you guys a secret. How many of you look at the volume in the open interest on the option chain? This tells you where the demand is at. So the volume tells you how many contracts are being traded, and the open interest tells you how many contracts are currently open. So if we're looking here, we can see, look how high the volume is. Look at this contract. These two is what I'm looking at. Remember how I said 0.33, 0.27? Look at the volume. $76,000. 76,000 of volume activity is occurring at this 445 strike. That's what I'm looking at. So that's why I'm determining my strike, my option I want. I'm looking at the volume, I'm looking at the open interest, and I'm looking at the delta. I don't care about theta because I'm not holding it for more than one day. So this is high demand, so this is what I'm buying. So I'm buying this here, and you do that for any ticker, any stock you're trading. You go to Amazon, look, boom, this is the first thing that stuck out to me. 2,351 and the open interest 33. That's where the big money is buying their calls. They're buying it right here. 40. Me personally, I wouldn't spend 5,000 on this to trade this, but if you got the money for it and you know what you're doing, yeah. I'm looking somewhere down here. Look at this, 6,000. This is even higher. This is cheaper and higher than this. 6,000 is being 212. 0.20 delta. I like this. 1.9. This is what I'm looking at. This is what I would buy for myself. So that's a tip and trick if you're looking at the option chain. And then if you have active trader, right, what I was telling you guys earlier, which is this, you see this number 2, this is what you will do. You will right click on it. You will go to send the contract to your number. You want to send it to number 2. So look, now the contract has been loaded in my active trader here. So you can see this is an Amazon call, strike 3,000, expires January 28th at 1.9. This is how I'm able to look at the chart and the premium at the same time. So as I'm looking at this chart, I'm able to see how my contract is moving. So this is why I don't really set stop losses. I just look at the numbers, like how much are you comfortable losing, So, and then I'm looking at support and resistance. So as this contract is changing, and look, you have these buttons. At the click of a button, you can buy and sell. If I click green, buy market, I'm buying at the market price. If I click sell, I'm selling at the market price. Or you can buy at the ask, sell at the bid. So this allows you to get in and out of your trades in seconds. And you have this button here. You change how many contracts you want to buy. You can size up. You press 1, 3, 5, 10, 20. At the click of a button. And yeah, I can send you this Thinkorswim setup. I can save it. I can actually just do it right now. Let me see. I'm gonna post it in the. Oh, and quick question: buying at the market and buying. You don't want to buy at the market if you're trading. If you're trading, it depends on what you're trading, because this is what you have to pay attention to: the bid and the ask spread. Right? Look at this. Look at the bid and the ask spread. It's $100 away from each other. So you want to be buying at the ask, and you want to be buying at the ask and selling at the bid. But when you trade buy, look how tight this bid ask spread is. $3. So you can buy market when you're trading SPY QQQ. That's why I preach buy, and that's why I preach look at SPY and QQQ, because look at, I mean, this one is a little bit more spread. You might want to use this is like $10, $9. So you might want to use the buy ask and you want to sell at the bid, but you see how they're not too far off, $7, you know. So if you need to be in and out of your trade and you don't want to risk not getting filled, use a market, if only if you're trading where the bid and ask is close to each other, so you don't lose, so you don't get filled at a price you don't want to get filled at. But let me see how I can save this set up. Let me see. How do I do this again? Oh,
If you go to setup,
here we go. Share grid, right? I'm gonna say 6 grid, 6 grid.
not the grid. If you go to the top right, go to setup.
Right here.
You go to save workplace as. It'll save every single thing, and then you can name it whatever you want, you know, like your name trades.
Oh, nice. Okay.
So it'll save all of your like your quick keys, like everything you use, it'll give to us.
Oh, nice. I didn't know that. Thanks for letting me know.
Yeah, of course.
So yeah, so if you don't want to have the hassle of setting up your hotkeys, you can just use what is this thing? Oh, characters. Let me take the dot out.
You can just put a dash instead or something. Yeah, and then save it, and then go to setup, and then go to share workspace, and then now it's there. So then click it, and then now you just click share, and then use that link. You have to copy and paste it, like open it or whatever, and then you copy and paste that, and then anyone with that link can automatically have your setup.
Right. Perfect. Yeah. Yeah. Thanks for sharing that. Yeah, definitely. I just sent the link in the chat. So whoever has Thinkorswim, you have access to my setup now. And these numbers, and let me tell you guys, I trade with multiple monitors. So this is just one screen. I have another monitor open that looks exactly like this, but it see, this is my flexible grid. Same thing. This is my other monitor. So now I'm watching. I'm either watching, I'm gonna put like Amazon right here, and I'm probably watching like 6, 7 stocks at one time. But you see how under each chart I have an active trader, because I want to be able to link my contract to my active trader so I could be in and out. So if I'm watching 3 stocks, I'm watching how the premiums are changing for each of these stocks right under the chart, and I can buy and sell by the click of a button. So I'm gonna wrap up here. So I just want to talk about some quick trading psychology things. So we all are here, we're trying to make money, we're trying to maximize our profits and minimize our losses. So one thing that has really helped me is you just, have to take your emotion out of your trading. If you're losing, if you have a losing trade, accept that it's losing trade and get rid of it. If you're in profit, take your profit and don't get greedy and don't put too much of your own bias and opinion into the chart. Trade what you see. Don't try to predict where the stock is going. Just follow where it's going, and then you just want to have your level set. You want to have your level set to where it's going to go, so you know when to buy and when to sell. And so, I don't know, like if you guys are on a winning streak, losing streak, always just take a step back and just always remember what's your goal, and your goal is to make money consistently. You don't want to be that. I was reading a guy's post today, and he said he made $144,000 in gains for the year, but he lost 196. So it's like, that's crazy. Like you made 144K, but then you lost 196K. So it's like, you don't want to be that person that has big wins but big losses. You want to find a strategy that works for you that can consistently make you money over the long run. Because if you do the math, if you make $200 a day, that's $48,000 a year. And a lot of us here have 9 to 5 jobs. And so we're doing this as a side source of income. So adding 48, that's 48,000 is a lot of people's salary in America. So if you're able to make $48,000 a year, that's perfect. And that's just, how trading is. Trading options is exponential. So once you master the skills, let's say you make 500 a day, that's over 6 figures now. Now you a 6 figure earner. And I know people in, if you're in PTX, Quese.Trades, he's making $20,000 to $50,000 per day. That's amazing money. Like that's money that a lot of people they don't even think it's real. Like, how are you even doing that? Like when I started following Quese.Trades, I was like, this man is really printing like money. Like he's like a walking ATM. You know what I'm saying? And how he just practiced the skill and he mastered it. So that's what we're all trying to do. So, you know, always keep that in mind. Always have your goal in mind, and you trade what you see and you stick to what you know. This is just my strategy I want to share with you guys. But if you guys have a strategy that's working for you, keep going. And if you need to tweak it, you tweak it. But yeah, guys, I'm pretty much wrapping up here. So I hope that this Zoom was helpful for you guys. I hope you guys learned something, and uh I'm going to continue to provide content. If you follow me on IG, I'm going to keep posting on my IG, my P&Ls. You can follow with me. I'll host some more Zoom sessions in the future. And as I grow, I hope to grow with you guys as well. We can all collaborate. Next time we could probably hop on the Zoom and you guys can share some tips and tricks that might help me out. So yeah, I hope you guys enjoyed this. And give me one second. Yeah, and if you guys have any recommendations as to like what I could have improved on or what I can do different or some topics you would like to talk next time, just you can follow me on IG. You can just DM me on IG, and for the next Zoom session, I'll try to incorporate that. But I'll let you guys. One last thing. Tonight, before you go to bed, make your watch list, go through your watch list, and draw out your support and resistance levels. Do that before you go to bed. You don't want to wake up tomorrow. I mean, you don't want to have to be drawing these levels out. Go tonight before you go to bed. Start with the weekly. Draw your levels. Do that for every stock you want to look at. I'm going to do that at least for. I mean, Apple's releasing earnings next week, so I'm gonna be looking at Apple, BA, Microsoft, Amazon, SPY, QQQ, Tesla. All of these I'm gonna have charted up before I go to bed. So make sure you guys do that. And then, yeah, I hope you guys have a good night and let's have a good week. So enjoy the rest of your night, guys. Thanks.